This is our Forex blog for October 24th, 2012. And like we do most days, we want to buy the strongest currencies versus the weak and sell the weakest versus the strong. This is our new Build Your Own Trend currency meter, which now has settings and weightings for all the different time frames, from ultra fast, 2 to 5 minute trends to daily, weekly, monthly. You can see I only weight the monthly trend 4%, the weekly trend 13%, daily 18%. Combined, the longer term trends make up about a third of the weighting, and 2/3 goes to real time trend. You can adjust these and set these, both the weightings in the first or the time frames that it uses the second option in this case, to perfectly match the style of trading you want to do. In the past, we've had currency meters that people told me, especially new traders, were too complicated for them. For example, the real-time trend was on the top. Underneath that, with a 15-minute trend, then the hourly, then the daily, then the weekly and monthly. Now, some days, all the time frames pretty much line up, like the Australian. Almost every time frame is up today, except the monthly slightly down. But sometimes currencies will be up in real time, 15 minutes up, hourly could be down, the daily could be up or down, weekly's the opposite, and the monthly could be anything. And this has confused traders. Which time frame trend do you trade under those circumstances? So that's the reason why we've tried to make this more simplistic. Let's scroll back so we can start or have the farthest time frame be at noon. So today it was pretty clear that one of the weaker ones was the Swiss at 2:30 and especially 3:15. The Euro was very weak. The Australian was considerably strong all day long. And so basically, in a nutshell, the first step of our easy 3-step system is just simply look to buy the strong versus the weak, or sell the weak versus the strong. Now, the Australian is on top of the Swiss, but on the bottom of the Euro Australian. So let's take a look at the Australian Swiss. This is going to go up. You're looking to buy this. You can see it goes up, sideways, up. By the pullback, it goes up a little bit. By the pullback, it goes up a little bit. You might have had a small loss here. By the pullback, it goes up. And that's it in a nutshell. Let's take a look at the Euro Australian. This is going to be going down. As you can see, it goes down, pullback, down. And this is just one way of trading using our currency meter. You can see 2 o'clock, the pound becomes very strong, for the most part strong all day. The dollar and the yen, between those two, you can pretty much see more weakness in the yen than the dollar, probably because if you go back and look at the old currency meter, the yen has very, very weak weekly monthly trend, whereas the dollar has a weekly monthly trend that's up. And so, taking that whole thought process out, you can see that reflected in a very easy histogram that I've tried to make it so that pretty much nobody can screw it up. If someone manages to screw this up, then they're not, pretty much, they're below average intelligence. You don't have to be a genius to trade, but you can't, look at these two things, and if you think that this weakness is less weakness than this, then this isn't going to work for you. I don't think I've ever met a person that should not be able to distinguish those levels, and that's why we marked the 80 level, to make it very easy to see. So buying the pound yen makes a lot of sense. So let me bring that one up. Here's the pound yen, and you can see a lot of our signals on the chart that let you know when to buy and sell. Pretty much later in the day, we're looking mainly for buy signals, and you can see a buy signal here and here that went up. You can use our trailing stop to exit that trade. Here's another buy trade that worked. Here's a buy trade here that worked. And typically people don't trade after noon, so you probably wouldn't have taken that one or that one or this one or this one. But as you can see, they all worked because for the most part, you're trading with the trend. Now, some of our signals, like the circles, are counter trend trades. And if you are in a trade and you see a counter trend trade, sorry about that, you can always move your stop. Let's say you bought right here. You move your stop underneath these bars right here, or 2 bars back, and then it goes up here, and you have a sell signal right at the point of control of yesterday. These point of controls are pretty high probability. A lot of times that's the end of the move. You always want to watch the real-time momentum too. Let's scroll back and watch this on the bar-by-bar basis. You got your buy signals a couple bars before, a yellow break, sideways rectangle breakout trade there. And notice how strong this currency is. The pound is one of the strongest ones, the yen is one of the weakest ones. So this counter trend trade does not use this real-time momentum. These signals are based totally on statistics and bar patterns, chart patterns in a lot of our tools, but it does not use the build your own trend, which is a live-only tool. It doesn't work historically. And when I do these testing of all the different currencies each day, I try to work on past bars to perfect the signals. But nonetheless, you can see that if you get a counter trend trade and it's not at or above the upper band, look down at this, and if this is super strong, you probably want to hang in the trade. If it's going up with something like this or like this right here, not that much strength, then you might want to get out of half your trade there and then use the trailing stop for the other half. Also, when you start seeing a bunch of counter trend trades, you can always draw your fibs on that last wave, and typically the next fib target up is going to be a place where you can usually make 10 to 15 pips on a counter trend trade. So you can see this pull back a little bit, came up again, pulled back, 20 pips. When it's above the white 2.0 band, and especially when I see the momentum slow down, so I wouldn't have probably got into this one, but when it came back up here and double topped without much strength, this is a wonderful trade right here. Very good, very high probability trade because it's up statistically too much and the momentum has died down. Now, again, our signals do not use this tool. If they did, it clearly would have found this double top right here with less momentum than before. But again, this only works live, and I'm using these signals based on chart patterns going in past history. So let's go back and look, for another example today. The euro was very weak, the pound was strong. This is not one that I typically leave running, but you could certainly look to sell the euro pound as well. And as you can see, just straight down. Here's some of the trades that I would take. Once you see a trend, nice little pullback like that, or if you, and we don't see any on this case, sometimes it goes down and it goes sideways into a nice beautiful rectangle pattern with 10 or 15 pip difference from the high of the sideways rectangle to the low. Never more than 15 pips. Should be just low volatility, chopping up and down inside there for at least 30 minutes to 40 minutes, all the way up to about 2 hours. Now, anytime you see a sideways rectangle for 2 hours, they're even higher probability. Now, once the currency's moved statistically too far, it's less likely to continue. So you can find that out by putting our range projection on there and putting in 1440 minutes. This will tell you how many pips it normally moves in a given day, and that's it right here. This is a 1 standard deviation low. Typically, currencies do not move much beyond the 1 standard deviation low. So having that up there in the chart, this is a trade I certainly would take. Might consider this trade here, but when it's underneath that level, I'm not taking any more shorts because it's more likely to reverse. Let's just take a look at what this looks like with the Euro Australian. Oops. Which we showed earlier. Again, notice the trend down. Most of the time the market reverses somewhere around the 1.0 and below. So if you want to do a counter trend, if you start trading US session, the market's down statistically too far, look for a counter trend, look for a counter trend, look for a counter trend. You're typically going to make more doing counter trend than continuing to pretty much beat a dead horse. It's already gone down too far. There's nobody left to sell, typically most days. And if you do that every single day, buying the severe lows or selling the severe highs, you will make money consistently doing that. On any given day, 1 out of 10 or 1 out of 15 days, the trends just keep going, but the majority of the time they reverse. Let's take a look at the pound coming into last night. It was relatively weak, and one of the stronger ones was the Australian. So last night, before midnight, you could have sold the pound Australian. Let's take a look at that. Coming into midnight, you can see down, and really at the beginning of that trend, 55.25, it went down 75 pips. And this is a perfect visual pattern of what the rectangle pattern looks like. Now, some currencies are more volatile than others. Euro-dollar pairs, most dollar pairs and yen pairs, 10, 15 pips max. You can see this is almost a 25 pip range, but it's also been going sideways for pretty much, once it goes down, up, and it can't make a higher, lower, low within an hour or two. You know, you can see 1, 2, 3, 4, 5, 6, 7, 8, 8 hours sideways. So the longer it goes sideways, the more up and down movement it can go. But for the most part, towards the end of this move, before it breaks down, you have this very tight range. The high of this is 42. The low is 28. It's got about a 15 pip range here towards the end. You know, the volatility got lower and lower, and when it breaks down right here, just off to the races. And that's why I like sideways low volatility consolidation patterns. Now, for those of you who do not want to use a currency meter, you want to skip a step, our FX trade signals are improving so much that you can just put our FX trade signals on the chart and take the buy and sell signals that fit, you know, the support resistance areas on the chart and your own personal beliefs on which direction the currency is more likely to go.